everyone, K Kim here. Hope you had a good week trading thus far. Today is August 8, 2017, Friday. Market should be open another 10 minutes or so. So I'm recording this video when the market is start to close. You'll see some flashing lights left of your screen. Welcome to the market update. Again, my name is K Kim with the Traders Club. Today we're going to be looking at Spider, IWM, Diamond, Qs, XLF, Citigroup, and Intel, and we'll call it a day. We've been talking about this rising pivot for some time now, right? As long as we stay above the rising pivot, right? It has been acting as resistance. After we broke above it, now acting as support for about 2-3 weeks here. So as long as we stay above this level, minor term benefit of the doubt goes to buyers. As you can see, we've seen a lot of dip buyers that are coming in. Even if you lose this level to the downside, it's not the end of the world, as we have 20 MA just hovering just below it. We do have a 244.82 probably gonna serve as a strong support, as it did act as strong support in the past. You can see how last time we found strong support right there, prior resistance. So prior resistance, new support is a strong level, and the market has been respecting these levels. So that's the level to watch should the price continue. What I think is going to happen, as long as we hold this level, I think it's gonna get up and it's gonna continue to come down and you know, like retest this level. That's kind of what I think is going to happen, where in the month of August, maybe there could be a rally and then pulls back. And obviously 250, 253 are my next target. But that's probably what I think is going to happen. 253 and possibly come back down, retest it, maybe even slightly come below it, freaks everybody out before going into the end of the year rally. So I think 258 is kind of what I see. Possibly we may get there before the year ends, but I think the next target on Spider is 250 and 253, rising pivot to watch. I'll continue to put this chart or this line, and then we'll follow up next Friday on the market update. But if I see any kind of advancement and going into next week, maybe I'll tweet about it or something like that. But this is a level to watch. We'll see how that plays out. Russell 2000 ETF did see some plunging action last week and half here. We blew through the 20 MA, and we're kind of back at that prior resistance or prior support level, right? This was important congestion zone there. You can see these two levels, a lot of activity that had happened there. This was a pivotal level. Things got a little bit hectic here for the minor term bulls on the Russell 2000 because, well, this was a higher low and this was a higher high. Well, we should have at least maybe stopped short somewhere here before making another higher high or higher low. Instead, what happened was we cultivated equal lows. And now in the minor term perspective, we would have to say that we're kind of entering into kind of a, you know, bearish zone in the minor term. However, in the intermediate term perspective, we are still in an uptrend there. We are still cultivating higher. This is a high. This is a higher high. Every new high has been met with that decline, right? You see that this high, decline, high, decline, high. This was when things start changing. It didn't come all the way down to the bottom level of the channel. It actually stopped short and made new highs. See, this is the first time we saw that happening right here, right? Because every new high was met with that kind of decline, coming all the way back down to the bottom of the channel, right? Here we didn't do that. We held it, and then we made a new high, right? The sentiment changed, but this time we came back down. So now, I think possibly if we hold this level of 139, possibly start to go up and start to form some kind of a head and shoulder formation. I am bullish on the Russell 2000 in the long term. I think these price action is there to kind of shake everybody out before finally sees a breakout. Breakout is going to happen. I think the question is when, right? And before the breakout, and if you study any kind of patterns, any kind of consolidation patterns, some takes less, some takes longer, but when the right before breakout happens, there's usually that one last shenanigan shakeout, right? So I think that's kind of what is happening here. I continue to stay bullish on the Russell 2000 in the long term, but things are getting a little bit hectic here in the minor term. For the minor term sentiment to get back to bullish, we want to see probably 242 you know, reclaiming above this. So let's see how that plays out. We'll follow up next week, and then we'll go from there. Let's look at the Dow Jones Industrial Average ETF. This is Diamond, DIA. Diamond has been very, very strong, right? 50 EMA has not even been retraced or retested since back in late May. Remember Spider retraced it many times. Even back in July, we came back down to 50 MA, right? And we're pretty close to 20. We're just right there near 20. However, when we look at the Dow Jones Industrial Average, however, is far from the 20, right? So 20 has been acting as support, you're acting as support. So should the price pull back on the Dow, 20 is level to watch. If we lose a 20, probably the 50 is there. So a lot of support. We're still in an uptrend. Everybody calling top on Dow Jones are getting demolished. This is very, very strong bullish action, and every pullback you can see has been met with that buying the dip mentality there. And you say, well, maybe this time it's different. I mean, how long are you gonna say this time is different? It hasn't been different. That's how it has been moving higher. You can see, even if you just go back, even since 2011, you can see that there was a lot of volatility. But I mean, even here, just this move, I mean, that 20 MA held for some time, for really, really long time. That 50 MA held quite some time here. And we're talking half year, from here to here. You know what I mean? So we're just getting going on the 20 MA. Who knows how long it's going to continue? Nobody does. So continue to give benefit out to the buyers on the Dow Jones. And if we do pull back 20 and 50 EMAs to watch, looking at the NASDAQ here, Qs were okay. We pull back a little bit to this prior resistance, and also you can see that the 20 MA is holding, right? The 20 holding, 20 holding, 20 holding. Let's see how that looks like. A little bit of like a consolidation pattern, possibly some kind of a bull pennant pattern before going higher. If we do lose it, prior resistance 142 is the level to watch. And if we do lose 142, we got 50 MA. So those are levels going to provide a strong support. Let's see how that plays out. Let's look at the banks. Banks made new highs today, right? Closing above this prior high. You can see right there, 25.26. We closed above it, or at least we're closing above it. As I record this video, we got 5 more minutes to go, but it looks like it's gonna close above it. And you can call bull trap, and there's a chance that it could come back down, but you gotta understand that that's how the market moves. We got cultivation of higher high, higher low. So 20 MA has been acting as strong support on the financials. You can see right there, here, and here. So let's see how that plays out. But trend is up. Everything looks great. Citigroup, we got some shenanigan yesterday, right? You saw that kind of a abrupt sell-off, and then we gapped up. Just pretty much was like, oh, what happened yesterday, right? But we're kind of up here. Probably gonna be a little bit of volatility that kicks in. But as long as we stay in the big picture, we're in an uptrend. We got 20 MA rising here, 50 MA rising. I stay bullish. I'm still holding positions there. Intel holding up well. I did tighten up this falling channel resistance a little bit. I know I tweeted it out, and that's when I tweeted it out. It was like at the top right here to meet with that peak. So I didn't like that, and it initially broke above it. But I'm just gonna adjust it a little bit because we're pulling back here a little bit. I just adjusted a little bit to accommodate that. But it looks like a little bull flag, don't they, right? A little bit of bull flag here. Possibly it can continue lower, like grind lower, and then meet with the rising uptrend support, and then possibly gets up. If this thing get above 36.64 and above 37.44, I think this thing is finally ready to fly. You can see how this is how the market moves, guys. This is exactly how this traps everything. Everybody traps longs and shorts. A lot of stops right here, down here, right? Recently, I wrote an article, Intel Set to Soar Part 3. I talked about it. A lot of stops were below it. Everybody started going for that exit. Comes down pretty hard. And then this was that falling channel kind of a action there. It got up. You know, so then we came down here. There was a lot of battle going on, and then finally got up. And there's some earnings. They had a good earnings, but some lower, upper wicks. People are still kind of getting scared. And then finally, he stretched his wings, and then now we are up here. So it looks like we're holding up well here. If this thing breaks out above it, there's the next level of resistance, 37.47, and then 38.06. But I think this is going to be a pivotal level because of this falling channel. Again, it's never easy though. These channel type of move, you could get up and then head fake you, come right back down and start giving you some other patterns. But I think 3660 above 3664, once they start kind of, there's a gap here that hasn't been filled. Let me actually draw that in. Probably going to act as support resistance there once that gap gets filled. So probably what I think is going to happen is probably come down a little bit, hit that support, break out again, hit that resistance, that gap fill, pull back, retest this resistance, new support, and then yeah, that might be the possibility there. So have a wonderful weekend. I'll talk to you next week.